we started off this day saying this is not just an event, it's a hybrid event. So this next panel, if you don't count myself on stage, is all virtual, and they will appear on screen very soon. And this is all the cutting edge stuff. So our panel is going to be looking at decentralized finance, the future of distribution. So these are all these innovations that you hear about: blockchain, crypto, tokenization, the metaverse. All of these are opening up this environment of what is called decentralized finance, or DeFi for short. And this is looking at with solutions that remove the need for central institutions and corporate structures. So this session is going to consider considerations, how mainstream all this is, and also what scrutiny they're getting from the regulators. So can I please have our panel come into the auditorium? Here they are. Wonderful. I'm going to read them out quickly. We have Oskar Åslund, Director of Business Development at AK Jensen; Mona L. Isa, Founder, Enzyme Protocol CEO, Avantgarde Finance; Ritesh Dutta, Co-Head Markets and Investment Solutions at SEBA Bank; and Valerie Seksikpanek, and I apologize for butchering your name, Head Strategic Hub for Innovation and Financial Technology, the U.S. Securities and Exchange Commission Chair, DeFi Working Group, IOSCO FinTech Task Force. Welcome, everyone. So we're going to introduce ourselves to you with a bit of a question here. I've got to introduce myself, even though I've been on stage all day. I'm Liz Lumley, and I'm Deputy Editor of The Banker, and as part of that role, I cover technology and all of that cutting-edge stuff. So our very first question that we are going to ask our wonderful panel is, we wanted to make sure that everyone was on the same page in terms of definitions. So we want them all to tell you how they define decentralized finance. So Ritesh, I'm going to start with you. Please introduce yourself and define decentralized finance for us.
I'm honored to be the first one. Good afternoon, everyone. My name is Ritesh Dutta. I'm a member of the Executive Committee for SEBA Bank, and I'm jointly responsible for the trading and investment solutions for SEBA. SEBA is a 2-year-old, fully regulated Swiss bank with a crypto and digital DNA, and we are based in Zug in Switzerland. And with that short introduction, let me get on to the challenge that Liz has thrown as to how do I define DeFi and what does it mean to me. So for me, DeFi is an innovation that I watch with equal measures in fascination and concern. So what is DeFi to me? DeFi to me is the provision of financial services using smart contracts. Without the need of a trusted central party, without the need of centralized institutions. It is provision of value additive services via smart contracts. And why am I fascinated by it? Because it brings enormous possibilities for efficiency, for transparency, for reduction in friction between value move, information moves, and it lends very well to automation. So a lot of things can be automated, can be programmed for that. And those are the things that really fascinate me. And the concern comes from the whole idea that, you are letting a smart contract, which is programmed, do a lot of things, which is we are placing a lot of trust into that smart contract, the fact that it will do as planned, that there are not, if I look at even Microsoft with $1 billion of budgets, has bugs that are continuously being discovered and fixed. And these smart contracts, which handle billions in values, are based on somebody having programmed these things. And we see accidents often. Of course, we saw last week as well. So that is something that is concerning to me. And of course, the possibilities to exploit, the possibilities to defraud some of the investors about it. And then the whole idea that there is no, you don't know who is on the other side of the contract. You don't know any KYC. There are concerns, initial concerns on the anti-money laundering aspects for DeFi. And there is no, as one of my colleagues says, there is no 1-800 number. There is no accountability. If something goes wrong or you need to know something, there is nobody that you can call. So this lack of accountability is of concern. So I'll stop there. That's what DeFi is doing.
Lovely, thank you, Ritesh. We apologize for the slight echo, but not sure what side that's on, but hopefully we can fix it. So Valerie, I want to go to you. Please define decentralized finance.
Well, first of all, thanks for having me. I am Val Sapanic. I'm the director of the SEC's Financial Innovation Hub, and I'm also the chair of the IOSCO working group on DeFi. And the views that I express here today, of course, are my own and not necessarily those of either of the entities that I represent. So it's a great question. I do want to point out that the term decentralization has to be picked apart. A lot of people are talking about different things when they refer to decentralization. They could be referring to an ownership structure, a governance structure, the way pieces of an organism are distributed across geography and across technology. And so decentralized finance really is trying to use smart contract enabled blockchains to enable products and services, typically financial products and services, in a way that tries to disintermediate or distribute control across a population. I would say that decentralization really is a spectrum. It's not a binary question. And so what you see a lot going on right now is experimentation, is a lot of experimentation with different governance structures, different, as I mentioned, structures distributing an organization across various places. But in the DeFi space, as with this so-called centralized space, there are a lot of interconnections between centralized finance and decentralized finance. There are increasing connections between decentralized finance and traditional finance. We also see a lot of off-chain provisioning. So there's a lot of reliance on off-chain information and structures like websites and oracles and stuff like that. And so we look at decentralization, you really have to look at each individual project and see what's happening, who's controlling what, who's participating, how decisions are made, and how decisions can be made and in order to pick apart. And from a regulatory perspective, we do see that many structures are not as decentralized as claimed. With some of the stuff that's been happening lately and some of the events of the last couple of weeks, you do see centralized parties stepping in to try to rectify situations. And so this is revealing that, many times you do have central acting parties controlling or able to control what is going on in a project.
Wonderful, wonderful, Valerie. Thank you so much. Mona, can we have you introduce yourself and define DeFi, please?
Yeah, absolutely. Thanks again for having us here today. My name is Mona. I have been in DeFi for 5.5 years. I founded one of the first DeFi protocols, which at the time was called Melon Protocol. Today, we have rebranded it to Enzyme Protocol, and it was the first decentralized asset management infrastructure in DeFi, and I think still is today. Prior to being in DeFi, I was in traditional finance for 15 years, mostly on the trading, market making, and hedge fund portfolio management side. So I've seen both sides of the DeFi, CeFi world in quite a lot of detail. For me, what was really exciting about DeFi and why I jumped into it as a founder 5.5 years ago was when I realized what the potential for smart contracts to automate the processes of financial intermediation could do for a system in terms of efficiency, reduction of cost, reduction to lower barriers of entry, giving people better access to financial products. And I think for me, that's still the thing that gets me the most excited about DeFi. It's the idea that even in traditional finance and centralized finance, we have financial protocols to adhere to. And it's because of those protocols that financial participants can trust each other to do a trade. If I do a trade with Oskar, on an exchange, I know with pretty high degree of trust that, if I buy some shares from him, that order will get settled in 2 days because there are financial intermediaries in the background that enforce that protocol. And if I if I borrow money from a bank, similarly, they have protocols in place to make sure that with a high degree of certainty, I will pay that back. So in DeFi, it's kind of the same. The only difference is that we're automating these protocols with code, with smart contract code, as Ritesh said. And so we're disintermediating the intermediaries and hopefully making things a lot more secure. Because of the qualities of blockchain, a decentralized blockchain like Ethereum, for example, you also get additional benefits. There's sort of more the D in Fi, which is the security aspect of it. Because it's a decentralized blockchain, it is a bit more expensive than other blockchains, but you have a high degree of certainty that transactions will be settled and that the blockchain is much less likely to be attacked by any kind of attack. And also on the decentralization at a protocol level, what it really does is remove central point of failure. So if, as Val said, decentralized governance is designed properly, there should be a governance system in place which removes central point of failure, gives stakeholders full transparency, and does not force them into doing anything they don't want to do. Nobody should be able to change the protocol without users opting in or buying into the proposed code changes. So you get transparency, trustlessness, which is the sort of financial intermediation, and security. And I think those are the things that get me excited about DeFi.
Excellent, Mona, thank you. And then can we have Oskar, please, rounding out the panel on your definition of decentralized finance?
Yeah, first of all, thank you for inviting me, and it's a pleasure to be here. I'm Oskar, so working as head of business development and at AK Jensen Group. So we have a hedge fund platform that caters for crypto funds and also for traditional funds, but very focused on crypto. So I've been part of building that out. So that's what I do, and on a day-to-day basis, I interact with a lot of, and I sit on the board on a lot of crypto trading hedge funds. So I'm pretty deep in the industry on a day-to-day basis. And if you want to put a label on me, I'm the crypto guy working in traditional regulated financial structures. So trying to navigate my way through all that. And so we are back to the question at hand. And what is DeFi to me? I think everyone here seems to have a very coherent picture of what it is. And maybe I can stress then a few points that you can have a smart contract-based financial service, of course, but if it's running on a private blockchain, I wouldn't call it DeFi anymore. I mean, the infrastructure has to be decentralized as well as that it's running on a smart contract. So that's not enough. And of course, we can discuss what is decentralized, but an open public blockchain like Ethereum is a good example. And then what? We've heard already some mention here that it could be a solution that makes you able to run financial services, and you don't need a corporate structure, or you may be able to offer these things completely without any kind of service provider. But I don't think that's really true. I think it's definitely true that you can automate things, but I think one of the pain points that we've seen in DeFi so far may have been that we've tried too hard. We tried to solve very complex problems. We tried to build a whole exchange and whole brokerage platforms, and maybe we did too much. Maybe we should start with very kind of simple solutions like trading one token against another, like really the fundamental building blocks. And then you may actually need a corporate structure, or you need to maybe have some kind of service provider that uses these type of tools that are the protocol levels. But now we've seen a lot of protocols, as they call, but they're very, very complicated structures, a lot of smart contract logic that they try to put a label on, and it's kind of a it's a company, but it's really they're trying not to be a company because it's good to be decentralized and it's nice to call yourself a DAO. And obviously that there's going to be a counter movement there that people will actually be frank and say, well, we're using smart contract-based tools, but we're actually a company operating in this space. But I think it's very important that we keep also the focus on what is the fundament here. The fundamental thing is that you can become your own custodian. You can take your assets out and keep them for yourself. You are not reliant on a financial institution to hold your assets. And we're removing cash from our societies. And with that, maybe the easiest way for regular people to take assets and own them themselves. And we're very blessed to live in a society, at least I am, and I think many of you, because you have time to be here and don't have to struggle for life, that we can trust our institutions. Our financial services work pretty well. So this is, to me, an opportunity to rethink. How can we build structures that are less prone to corruption, that are maybe more resilient when it comes to, when you're in a situation like we have seen in Ukraine now, when financial systems start to break down, politics starts to break down, there's violence. Who do you trust? If someone controls the financial institution, do you really want to be forced to keep your assets there? Wouldn't it be good to have some at least one asset that you can take custody of yourself? And I think there's a lot to that. So I think we should use this time of stability and political trust that we have built to build resilient systems that we can then create services on top of.
Wonderful, Oskar, thank you. So now that we're all on the same page on the definitions of decentralized finance, we're going to go a little bit deeper. Whenever you see conversations and discussions around DeFi, you either get a lot of people who are hardcore evangelists for this environment and are really, pushing forward for this is the future of finance. This will be our future environment, will be decentralized very soon. While others talk about kind of, all different layers working in parallel with each other, and DeFi being almost an innovation layer or an alternate layer. But where is the reality? Like, where is decentralized finance going in terms of it being mainstream? So I'm going to actually reverse the order from what we just saw and go back. So I'm going to go back to you, Oskar, to start from this. When is DeFi really going to be ready for mainstream reality? So Oskar, I'll start with you.
Yeah, and obviously this industry started with the retail world. So in a way, it started off being very mainstream because it was the regular people who could just go to the internet and download an app and then start to do whatever they wanted to do. So in a way, it can be ready for mainstream already from scratch. But if you look at it more like when is it ready for institutional adoption? Because that has really been what all the fuss has been about lately. I mean, there's been so much institutions are coming soon has been what's been driving the market. Everyone's waiting for institutions to come in and they built super fancy technology, but no one considered compliance and no one considered regulation. So it's kind of a funny thing when you work in a regulated financial company to see, and I'm still part of that kind of discussions online and so forth. Everyone's waiting for institutions to come in, but they build a technology that institutions cannot use because they haven't considered compliance at all, and that's all the institutions think about. So there's a big gap. I would look at the current state of the DeFi environment as a proof of concept that, okay, the technology is here, it works. We've seen a lot of interesting innovation in terms of business models, and that has changed, and you've talked about DeFi 1.0, 2.0, 3.0, and so forth. And I think it's much more mature at this point, but we still have a lot of work to do together with the regulators and to figure out how can we enforce sanctions? Can we have an AML KYC framework that fits with this open infrastructure? Because it's very transparent. And if you add identity and complete, traceability on top of that, it becomes maybe something we don't want anymore, because the combination of full transparency and also that you can identify each actor might be too much transparency. So there's one difficult challenge that needs to be resolved.
Excellent. So I'm going to go to Mona next to get your views on the mainstreaming of DeFi.
Yeah, so I would sort of agree with Oskar that DeFi is widely used, but I wouldn't go as far to say that it's mainstream, because I think that the people that interact with DeFi today are still very crypto native and quite technically savvy. I think they would still be considered early adopters. They happen to have, a fair amount of money because they were early in the space, and that capital that they started with is probably appreciated. But if I ask my friends, or if I tell my friends what I do today, most of them just look at me confused and have no clue what I'm talking about. So I wouldn't go as far to say it's mainstream. I think it's still relatively hard to access. You still need to know how to interact with wallets and how to buy crypto, how to move it into your wallet, how to look after your custody, how to look after your keys, how to interact with the protocol. I mean, anyone who's done anything in DeFi will know that, especially in the early days, you'll have a lot of issues making your first trade or making your first DeFi interaction. And it takes several months to get used to it and to kind of get used to those issues and deal with them. I also sort of will slightly challenge Oskar in the sense I think that most people haven't considered compliance and how to scale. I agree with him in the sense that the next leg up in DeFi will probably come from institutions and from mainstream. But I think that it's not true that DeFi protocols are not thinking about it. Many of them are not. I think there's like this extreme on one side of the spectrum that are very idealistic and probably unrealistic to some degree, and think that the system doesn't need to be integrated into a regulatory environment. But I think from day one, maybe we like to joke often that our team is one of the oldest teams in DeFi. But because of that, I think we've got a lot of real world experience, and we're probably a little bit more pragmatic. And from the early days when I founded Melon/Enzyme, we have always been thinking about how to build it architecturally so that it can adapt to whatever compliance and regulatory requirements come along in future, so that TradFi can easily plug into DeFi. So that seems to now be paying off. And the last thing I'll say on that topic is that Enzyme was the first protocol in DeFi history to decentralize its governance. We decentralized our governance in February 2019, which means that we now have very little say over decisions. We get one vote like everyone else on the Enzyme Council. And it's not a token holder governance, so it doesn't matter how many tokens we all hold. It's not gameable. So the only thing that I am involved in right now with my company, Avantgarde Finance, is continuing to contribute to the code base and improving the code base. But also we have been for the last year or two thinking about how to build services on top of this open source decentralized infrastructure that will be the rails towards traditional finance and centralized finance and institutional. And that's what we've been doing for the last couple of years, really thinking about, if you think about Linux as a open source protocol, Linux is great, but no one really would have known how to use it had Red Hat not built services on top of it for institutions to easily access in a compliant way. And that's how we see ourselves in the next chapter, not controlling the protocol, just continuing to build on top of it and hopefully get it adopted into mainstream through the services that we build that get people comfortable using it compliantly. And I think that's a really exciting next chapter for us.
Excellent, thank you. I think that leads us very easily into getting Valerie's view on the mainstreaming of DeFi.
Sure, and the question is a little tricky because when you're talking about mainstreaming, I think a lot of people have access to DeFi. Again, it's open source, it's permissionless. It is available for anyone to use that has a computer and has a little bit of technical know-how. And user interfaces are getting more and more sophisticated and easy to use in terms of interacting with the protocols or putting protocols together in a composable way. But if you take a step back and say, is it ready for mainstream investors, meaning Main Street or mom and pop, or however you want to put it, retail investors? I think people should approach it with caution. There is a lot of, there are risks to investing in DeFi or to using DeFi. And it's very important, critically important, that people understand those risks when they're going in, and that they understand that that there is a lot of bad activity out there. Even if there's no bad activity, the protocols are complex and complicated. The interactions between them can have unintended or unexpected results. There are a lot of automatic trading going on that you may be trading against. So folks should go in knowing that even if there isn't fraud happening, you could lose your entire investment just due to how the trading is occurring, or you could misunderstand a protocol. So I think before retail investors get in, we need to have more transparency. There needs to be better disclosure around what's happening. There needs to be more market transparency. We need to have protections in place to prevent market manipulation. People need to understand what the conflicts of interest are, and really what they're getting into when they get into these complex structures and protocols. And then on the flip side, if you're looking at institutional investors, is it ready for them? Well, I think Oskar makes a good point. There are a lot of protocols and applications that are operating either outside regulatory frameworks or in non-compliance with regulatory frameworks, and those are very important. And institutional investors are going to be held to the standards that apply to them and the rules that apply to them, and they will not be able to participate if there aren't compliance with important things like anti-money laundering, countering the financing of terrorism, sanctions, compliance, and those types of things. So it's at a very early stage. There's a lot of development going on. There is people who are working in this space. They hope to achieve certain promising aspects of decentralized finance, like inclusivity and efficiencies. But again, it's a very experimental stage of the technology. There's been a lot of focus on end user applications and maybe not enough focus on making sure that the infrastructure that you're building on is suitable and fit for purpose and can comply with important public policy frameworks. So I think there needs to be caution on both ends, on retail and on institutions getting into the space, and for the developers developing in the space, I think good advice is to try to build compliance into the technology. The technology is powerful, and I think those projects that want to be compliant and work with regulators to do so will have the longevity. In other words, people are going to want to participate if they feel that it's safe to participate and they're not going to be hit with surprises like some of the ones that happened over the past couple of weeks. And so technologists and developers are well advised, I think, to build compliant structures from the beginning.
Wonderful, thank you. So I wanted to bring in Ritesh to kind of have your thoughts about whether DeFi is ready for mainstream.
Yeah, I think Oskar, Mona, and Val made the points pretty much before, but I think just the three key things I would say. I think DeFi is not going away. It's moved on from being an experimental. I mean, it has something like 40 to 50 billion in the values that are invested there. So it's moved on from being experimental. It is not mainstream yet, but it is here to stay. That's what I would say. Point one. The second point is it will have to adapt to grow. I fully agree with Mona on this. It is still people who are pioneers, savvy, who are comfortable with crypto, digital assets, who are engaged in this predominantly, and to unlock the new pockets, right? To unlock the vast waves, whether it is institutional or retail people with appropriate protection coming from the institutional side. To unlock those pockets, DeFi needs to adapt. And what we see currently, I think that process has already started. That's the third point I would like to make. Some of these protocols that grew big, they are now realizing that they are kind of plateauing. And to get the new investors involved, to get new people into these protocols, they need to address some of the shortcomings that have been adequately highlighted by Val and earlier before. They need to be addressed, and they are working on addressing them. So we on our side see it as there is an amalgamation that needs to happen between the benefits of decentralization, benefits of a smart contract-based service provision, together with a service layer which addresses some of these concerns, whether it is on due diligence side, transparency side, auditing, KYC, anti-money laundering, sanctions, etc., which some of the institutions are good at. So this amalgamation is the next engine which would make DeFi go to the next level. I would still not call it fully mainstream, but without this, I think DeFi is going to stay where it is.
Lovely. So we are running very short on time. We've got very much less than 10 minutes, but I want to get a couple more questions in specifically about liquidity, cross-border trading, and then we'll get a final comment on how regulators are looking at this from Valerie. But Mona, I wanted to start with you. I mean, can decentralized finance create additional liquidity for the market, Mona?
I think the beauty of decentralized finance when it comes to liquidity provision, and again, I think this is the case for a lot in DeFi. It's really revolutionizing the how, not the what so much. But it's really the interesting thing in liquidity provision that we've seen is this ability for anyone to be able to provide liquidity to an asset pair. And traditionally in traditional finance, this would be only large market makers with very large balance sheets who are able to provide liquidity. Today, if you are sitting on a large position of ETH or even a small position of ETH and say comp tokens, you can deposit the ETH and comp into a liquidity pool with others, which will be powered by an automated market maker, which will provide liquidity to people buying or selling comp against ETH. And as a liquidity provider to that pool, you will be earning commissions on every trade that occurs in that pool in the proportion to the liquidity that you're providing. And sometimes you will also benefit in other ways if there's a liquidity mining program associated with it. And so I think this is really interesting, the ability for anyone to provide liquidity and make a market in anything, whereas today liquidity provision typically will only occur in a very centralized, with very centralized institutions who are willing to provide liquidity, institutions that have very large balance sheets, and institutions that choose they want to make liquidity in a certain asset pair. So I think that's definitely changing liquidity on assets and definitely enhancing cross-border liquidity provision for sure. And it's pretty exciting to see which direction this goes.
So Oskar, I mean, does this extend the potential for cross-border trading then?
I mean, in its nature, this doesn't have any borders, right? It's the technology itself is obviously borderless. So definitely, yes. So whatever puts borders here is regulation. So, you know, regulators, if you want to have a borderless environment, then, you know, when designing regulations on how to treat this, then that is the issue. You know, different classifications of different types of investors, institutional investors, or qualified investors, or you know, elected professionals. So, you know, these type of questions, if they are addressed, then this is borderless. But there's obviously other borders here. There's you have to have different chains operating together. So interoperability between different chains and protocols will be the problem that needs to be solved here, rather than cross-national borders, right? It's how do you trade on one layer two if you're on a third layer two, and the service you want to use is yet on another one. So there are other type of borders that apply.
Interesting, rather philosophical concept. Are there no borders when there are no borders? So Valerie, I'm going to end with you to close us out. I'm sure everyone in the room is interested to know what regulators are thinking about in terms of decentralized finance.
Yeah, I mean, a couple of overarching tenets of regulators that I've been in touch with around the world is that we want to all encourage beneficial innovations and those that bring benefits to investors in the markets. But at the same time, all of us are kind of tasked with protecting investors in the markets and financial stability and other key public policy goals. And as I mentioned, there's a lot of work going around to make sure that these public policy goals and frameworks are adhered to. If people think that regulations don't apply to DeFi, I think that's a mistake. We don't regulate, typically we don't regulate a technology, we regulate conduct. So to the extent that the conduct is covered by various regulators or supervisors, they will look at that as regulated conduct. There may be challenges with, you know, gathering evidence or deciding who might be responsible in a given situation. But those challenges are not new, and they've arisen before in other contexts. So I would say that, you know, there's a lot of work being done at the FATF, the Financial Action Task Force, around AML and CFT. And these are very important goals that we need to achieve and make sure that people are cognizant of and that are building into their technology. There's a lot of work at IOSCO. The securities regulators around the world are looking closely at DeFi and market risks and investor risks and financial stability. At the Financial Stability Board, there's a lot of work around DeFi and stable coins and other crypto assets. And so internationally, folks are coming together. I think it's critical to have a shared understanding of what's going on. Our IOSCO report, for example, made an effort to really lay out what's going on there and try to put it in terms that people understand, so that they're working from a common set of facts and not pushing any particular jurisdictional view per se. But there's going to be a lot of continuing work, I would say, over the next couple of years with international authorities working together to try to bring investor and market protection and financial stability to the space.
Excellent. Thank you all. Obviously, this is a topic which is much bigger than the time allows, but I want to thank our virtual panel for coming in. Mona, Valerie, Ritesh, and Oskar, thank you very much.
Thanks for having us.
Thank you.